Here we go. This is Apple Computer, folks. We got bids out at 25 cents. The call was $22. It's an options expiration on a great earnings report. 75 cents is the low. These contracts expire in 35 minutes. However, the SMF market maker's been waiting patient to make a move all day, and we have got bids out there at 25 pennies. Hitting 7 pennies. You're below that strike. We're going to have to see some price action volatility off of the low. We're at 0 in the brain. Look at those things come. We're below the 620 call strike right over here. This is what it's like in an options expiration. And we're down at 25 pennies on the entry. Right now, we're going to see if we can do a mojo. And that is, can we do a big rip off of that bottom? There's that print. He got a 65 penny print. 75 by 90, 60 to hold. 65 is up into the shoot with the 50 below. We're not far from that 25 penny bid in that price action live here on this options expiration. There's nothing fake about that, my friends. We hit 50 cents at $22 on the high. They closed at $18 right there. Let it be known. 60 pennies right now. 60 pennies right now. I mean, we're in the heat of the battle. They're below that strike price. Down $7 on a great earnings report on an options expiration. What a way that they're starting out the earnings season. They've done it this way all week long. So let's see if we can get hit out there. We've got those limit orders out there, and we're not changing them. That limit orders to buy 50 contracts at 25 pennies, and we're 55 by 70 pennies. Let's take a look at that. Google coming down to the wire. It's got a 369 reversal pattern. He slides the bid down. 1, 2, 3, 4 teenies at 67 cents a teeny. I'm hitting that 50 penny action. We're heat boned. We're below the strike price. Guess what? There it is now. We got exactly 33 minutes to the closing bell. What's going to happen over here in that price print action? If you've never been down in a right to the wire and an options expiration, at least you're here now, because it's going down right now with the 36912 reversal in that price action with the 50 penny low. Hey, my friends, if you had 10 contracts up here at $22,000, they're only worth $500 here. And we're below the strike price, but we're going to see if we can get made and what it would be like. That ratio, we're over a half delta down, 0.66 ratio. There it is. We hit a 50 cents. We're out at 25 pennies. I'll update you. Section volatility, I'm back live. Here it is, 60 by 80. There it is. Can he get a bid pop off that late day bottom and walk that dog and take these higher? Going right down to the wire, 50 pennies. We're out at 25. We got limit orders at 25 pennies. Senior traders, stay alive. Here we go. Price action is going all over the place. They're whipping and selling it. Stop market orders are taken out in the name. There it is. This is the options expiration. And they're sliding the bids. They're sliding the bids. So let's see where we end up. We're out here at 25 pennies. 25 pennies. That's us. 25 pennies. We're 45 pennies. If I slide that bid anymore, I'm going to take my 25 pennies down to 15 pennies. Just because I'm printing on this side of the tape here, and they're not whipping that thing off that bottom, and this thing is printing 1 right now, meaning that the intraday range is weak. So we're at 40. I'm close to getting hit. Here's my order, but let's get ready to load this at 15 cents. And let's hit cancel all, and let's go ahead and do another bid, and let's bid it at here. Let's get this. Let's go out on the SmartX and let's go 15 pennies because we stopped the other one. And there we are. We're out there live right now at 15 cents. But this thing is dropping below. That means it's got to bounce $3 or $4 into the close to make that work. They got to 30 pennies. $22 down to 30 pennies. That's pretty sick on what these people are doing. And lots of people do write them down. But I'm going to try to get hit off that bottom. So let's see if we can get that ham hit. I'm out at 15 pennies. I'm going right down it, but I'm still extremely weak in that move. I'm not far from getting into that money. He's trying to hold that. Look at that print. They're printing wild all over here and now. I had nothing but a 15-minute reversal in that price. Take those options down. We expire. We still have 29 minutes to the closing bell, and this thing can rip up to 622 and a half, 623. Well, you'd have a big trade right into that expiration. Stand by. This is live 2011 options expiration on Google MMTs. There is nothing more grateful than living this very moment here and now in the price action. You can keep talking. Let's talk about that intraday range. I'm not sure. I might have to start me another chart. Thing about it is, you're trying to get some bid pops going into the close right there off of that 3-minute bar. Here you are, 40 by 60 right there, 0.30. We're out of 15 pennies. Look at the volume go up in that call option. That's the $620 call. January 1/22, 2011 expiration here and now, and it's still below the 620 strike price, meaning that for that to make money, for the people that don't know, you got to go above 620 in order for this to gain value. And are they going to walk the dog? Right now that range and that ratio is going the wrong way, so the chances of that happening are slim to none. We just put in an intraday trend ratio low of 0.76, and I'm going to try a different 3-minute chart because I think I'm having a problem with this one. So let me go find another one, and we're still out at 15 pennies, and we have exactly 26 minutes to the closing bell.
See that wick? Holy.
Here we are going right down into the close. It's 12:36 p.m. Pacific Standard Time, 1/21/2011, and we're out there at 50 pennies. We would love to get hit at 50 pennies and bounce back to $1. That wouldn't hurt our feelings, but something's going to have to change here as far as that downside volume right now in order for that to happen. Otherwise, we will have to back off of the contract if we don't start seeing a bounce. So basically, they can take these things right down to the wire, right down to the last minute, and we're at 15 cents. Right now, the way that that brain is running, we're going to go down at a nickel. So basically, we're coming down to 20 cents. I'm going to get down here at a nickel on 50 contracts, and I would have to see over a $2 bounce. If I start to see any slippage, then I'm going to pull out of the nickel. But remember, I would be the king wholesaler. There were $22 a contract, and I'm out at a nickel. So am I wholesale or retail? Now, Apple's got to perform off of the bottom, and it can't. So we're going to have to see some big price action, like a $3 or $4 or $5 move, because number one, these aren't going to get any value if they don't get above the 620, and they're going to be expiring in exactly 21 minutes to the closing bell.
25 cents.
And it will be all over. Let's see if this thing has got any juice, but these things aren't moving in the right direction. In fact, they're going quite the opposite in the brain there in the market maker platform. So we're still going to hang there. It could happen any moment. We've done this several times. We've got several live other trading videos on it. Watching us do, we were going through the same thing, just a different day, different year. And 25 pennies by 30 pennies. 20 pennies is a low. And we're live in action. This isn't fake, showing you something after the fact. No, no, no. It's happening now. And it's an options expiration. So let's get a grip. I'm down here at a nickel. But if we're not going to bounce, I got to bounce $1.50 just to get to the strike price to 620 call, and then it's got to go a couple dollars above that, and it's got to do it all between now and the close, and it's just having a hard time.
15 cents on the bid.
The brain is printing at 0, and that means that we're not bouncing. There's 15 cents. We'd already canceled that, went down to a nickel. We know exactly what we're doing. This is one of the best live options expiration videos ever on the planet because it's happening in the market now. And if you want to learn how to be a market maker in the options, not what you always have known, but a real one, then come see me. There you are right now. You're bouncing. I've got here, let's see what kind of bounce that we may or may not get. And let's get this up in the video just a little bit so you can see the green bar. You can see the long, short MMTs. There's that break. Now, are we going to bounce? It would take an act of Congress. So you're $1.60 from the 320 call strike price going into expiration close. Here it is. You're going down to the wire. I'm out there at a nickel. It's here. It's now. It's in the options expiration 2011 January. It's the first one. And look at that. That was $22 for one contract.
Alert Google.
Look at it now. 16 cents is the low. But we took ours down to a nickel. Okay, they're 20 by 30, but we're not bouncing off the low. You got to bounce hard off of that low to know that you can get involved. And we're not seeing that in the brain. Okay, we're just not seeing it in the brain. So the brain's not validating the move right at the moment. And it's got to validate it with big moves off the low. In fact, it's sliding the bid the other way. And the NASDAQ 100, the other culprit following with it, is this Apple computer. Okay, so there goes Google in an options expiration volatility right along with it. So let's see what they do off of the bottom. Do we finally hit a bottom? We're just on standby. So there, he took it down this far right here. That's where he took it all the way down there. And now he's trying to walk it this time again. And it's extremely weak. Look at that, 0.86. Teeny's down, $9.27 down on dollar movement in the SMF platform. Therefore, so far the bulls are going out not in a good way on a 620 call options expiration. 15 cents. The high is $22.